Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. Friends, today we are going to discuss about three blue chip stocks that have significantly corrected over the last couple of days. So investing in blue chip stock is significantly risk free given that they are well established in the market and also has huge cash flows. All right. And also today we are in a very good position that given that Nifty has been range bound in the last 6 months of in the range of around 17,600 to 19,000. So now the Nifty has corrected significantly, almost around 10% from its peak, and there are good reasons for it to bounce back from the current positions. The reason why I'm saying this is the macroeconomics of the globe is looking pretty good, given that the oil prices have cooled off, and also the war which is happening in Russia is being factored by the market. So all the bad news in the market has already been factored in, and also there was some good news coming from the Fed that going forward they are going to reduce the pace in which they are going to increase the rate interest rates, right? And also if you see the volatility index in India, it is very low, given that is actually reflecting that most of the bad news have been factored into the market and it is in currently good shape. Right. Given this background about what is happening in the macroeconomics and the world economy, it is very good time to invest in blue chip stocks which are relatively strong in the market. So now today we are going to discuss about three blue chip stocks in different segments. One is in the consumer goods, the second is in the multiple sectors, which is basically into the oil refineries and also telecom and also in the retail. So friends, guess which stock I'm be talking about in the second stock and comment in the comment box. And also I'll be talking about another FMCG stock which has relatively corrected. So with that understanding, let's get started with the stock number one. So as you see here, the stock number one which I'll be talking today is Asian Paints. So Asian Paints is one of the leading paint manufacturers in India, which almost shares almost 50% of the market share in India. And also in the recent times, they are ventured into a couple of other businesses like kitchen business and bath business and so on, right? And you can clearly see here the paint business, they have almost 50% share in the organized paint sector. So this gives a confidence that this company is a very strong company with a good market share in the particular industry and also have other growth businesses identified in the long term. And also if you see the debt of this company is 0.13, which is very low for this kind of company, right? And to see how the company shares have been performing in the last couple of months, here I'm seeing the chart for the last 1 year. So it has significantly almost around 20% correction from its peak of around 3,570 to the lows of 2,900. So this is a very strong position. You can see here previously it was traded a long time in the range of 2,900 to 3,000, and then it actually break down and again gave a significant run up, right? So given here it has corrected significantly, there is very little chances of it to correct further. Even if it corrects further, I think it will give another opportunity for the investors to invest in this stock, right? So always I'll invest in couple of installments like 3 to 4. So whatever capital you have, it is always best to invest in installments. And also if you see the PE ratio of this company for the last 5 years, it has almost touched the median of 5 years, which is also giving a very significant view that it is in a very good valuation currently. So investors, given that the strong position that the company has in its segment and a significant correction and also the valuation, it is a very good time for the investors to invest in this particular stock. Coming to the quarterly results, if you see in the September quarter also, it has given a good revenue growth, and also the profits has significantly reduced in the last quarter. That was because of the high crude prices. But given that the crude prices have been cooled off in the recent quarter, we can expect a good result in December quarter, which actually will give a good shoot up from the price at which it is currently trading. So with that understanding, let's move to stock number two, that is Reliance Industries. So Reliance Industries, as I mentioned previously, it is into multiple sectors, basically into the oil and chemical segment, consumer retail, and the telecom business in terms of geo. This company stock has significantly corrected from its peak of around 2700 and is trading below the 200 DEMA. So this kind of stock, which is has a strong cash flows and also a very significant market share in all the three sectors which it is in, this kind of correction is a good opportunity for the investors to keep invested. Right. And also, if you see the chart of this particular company, it has always been cyclical. It has always touched the levels of 2700 and also has come down multiple times to the level of 2400, right? And it has been always been almost for the 1 year it has been range bound in this particular range, and if it is touching its lower positions of around 2400, and whenever it crosses below the 200 dema, I think it is a very good opportunity for the investors to keep segregating this particular stock. If you come to the reason why the stock has corrected significantly, here you can clearly see, friends, in this particular media report, it clearly shares that it has fallen almost 15% from in the last 6 months. The major reason for for the decline is the windfall tax that the government has levied. Right, basically the windfall tax is for the oil refinery companies, discourage them to export the oil that they have refined in the country. Right, so this windfall tax may go off in couple of months, and then again this will be a good reason for Reliance company to actually bounce back from its lows. And also there are a couple of other reasons, like the Singapore gross refinery margins is showing lower, that given that the crude prices have cooled off, or the refineries companies, the margins may go down in the coming days. Right, with that understanding, let's move to the stock number three, that is Avenue Supermart. Right, you would have seen in the news that Avenue Supermart has corrected significantly in the last couple of days. That is basically because the quarterly results have not been very good. If you see this stock, it has reached almost a peak of almost 4600 and has been trading at levels of 3650 or 700 currently. And also there is a good reason for it to correct significantly further to levels about 3200 or 2300. Right, I think that that would be a right time for the stock to be invested, because if you see the PE ratio of this particular stock, even that has been corrected significantly. But if you see the PU margins of its peers, there is a good scope that the current prices may further correct. If you see some of the other companies like V-Mart Retail and like V-Mart Retail, it is around 86 PE. So I think even this particular stock may further correct, given that the downfall has started. Right, but the major reason for the stock to correct is basically the quarterly results. It has given a poor profit margin improvement in the last couple of quarters, which the market has disliked. If you see here, the overall revenue of the company has increased from year on year. That is around from 9,200 to 11,500 crores. Right, and also if you see the net margins, it has year on year it has increased from 553 to 590. But if you see the quarter on quarter net profit, that has declined. That is the reason why the market is not liking the quarterly results, and it has given a significant downfall from there. But given this particular stock, the overall growth that it shows in the coming days, I think that it is a good time for investors who are bullish about this stock and have confidence to keep investing in this particular stock. The major reason why I'm bullish about this stock, if you see, they have given very good details in their quarterly results, which shows that they are into multiple other businesses apart from the brick and mortar business, where you go and buy goods, FMCG goods from their stores. They also have the DMart Ready, which is already operational in 18 cities, and they are going to expand this. DMart Ready. DMart Ready is basically an online services like Flipkart or Amazon, where you book a particular product, FMCG product, and it will be delivered. So they are also venturing into this particular sector, where they can compete with the majors of Flipkart and Amazon. Also, they are also starting into the pharma shop in shop business, which is still in a very small stage, right? But overall, the business looks good on a long term, and this would be a good opportunity for investors to start investing in this particular stock whenever there is a significant correction. So even at the current level where it is falling significantly, I would request the investors to be away from the stock for a couple of days. But once it reaches particular levels of about 3,300 or 3,200 and start trading at range bound in that level, that would be a better position for the investor to invest in that particular stock. With that, I think hope you like this video, friends. Please like this video and subscribe to the channel, and also share with your friends. I'll see you in the next video. Thank you.